Welcome, ladies and gentlemen. Today is the 26th. Boy, what a crazy couple of days in the market. The earnings came out last night, and Google and Microsoft, they all tanked, and it was just incredible to read some of the comments. Everyone thinking the markets were going to collapse on this news. I did some look at Google's earnings, and they were off by about 1.5%. Still making billions of dollars every quarter, and everybody thinks that the markets are going to unwind even further after such an extensive downward trend. I really wanted to go over some highlights here to show you why MENT.com Technologies is so important to you, and to focus primarily on the live trades algos with the pure alpha ranking system, as well as the MENT rotational modeling system right here. So we're going to focus primarily on these two things today, and understand that this is part of the reason why what I deliver is so important to you and so critical for you to understand. Remember, all of this is free. You get over $3,500 in real value, subscription value, completely for free at ment.com. Why am I doing it? Because I'm trying to help you. Trying to help you manage your money more efficiently, learn to trade more efficiently, and learn to take advantage of some of the tools that I deliver and I use every day. So first, we're going to look at the rotational modeling system, which is right here. Sorry, right here. Boy, had to look for the right tab. And why it's so important. Understand that the rotational modeling system is long term. It's if you have, a couple hundred grand moved over into a retirement account, then you want to really take 80 or 90% of that money and use the rotational modeling system as your primary investment decision-making system. In fact, I use it as the primary basis, the high-end overview of what's actually happening in the market and how we should understand our allocation levels. The purpose of the rotational modeling system is to keep us away from risk, to profit from the longer-term trends, and to protect capital more efficiently. The rotational modeling system works in a both daily and weekly structure. It is very, very consistent, as you can see here, and it's designed to help us manage, protect, and grow our wealth over time. You can see that the rotational modeling system has performed above and beyond the S&P by close to 300%. I mean, it's really quite impressive when you take a look at these numbers. 1,576% roughly compared to 474. That's really a 300% increase in the return on investment if you were to follow the rotational modeling system explicitly over the last 24 years. So understand that this is really, really important to grow your wealth over time, to focus 80 or 90% of your investment capital on the rotational modeling system. And remember, all of that is delivered to you here. When you come into the weekly summary, which is inside of the Live Trades website, when you log in to ment.com, Live Trades end of day is listed as one of the services for you. From the home menu, to get to the video or the summary, you use these two buttons here, or you come over here to resources, and they're right here as well. But when you go to the summary and you scroll down, the very first thing you're going to see here is the rotational modeling system status page, which tells us the current weekly system is 25% allocation in bullish, daily is 75% allocation in bearish. The net result of that, the combined one account position, is 50% bearish, 50% in cash, and this is updated as of last Sunday. This tells us exactly where we're at. We're plus 6.41% in that downward trending cycle. If the daily system moves back to bullish, then we will move back into essentially a 100% SPY bullish position, because the net bullish, 25% bullish and 75% bullish would equal 100% bullish, and then we would be in a 100% bullish trend, and that's something that may happen before the end of this year. Additionally, below that, you have your trending scenarios, you have your allocation levels here, and then you have some basic performance data to keep you up to date with what's going on. I normally update these pages these particular pages with the longer term data at the end of every month. So again, the rotational modeling system is very, very critical for you to understand that this is your basis of all investment decisions. This is what you should be relying upon for the longer term, higher end overview of what's actually taking place in the market. Now, when we move below this and come into these custom indicator charts, which I update every Sunday, these are what I use to get a more intermediate term gauge of what's happening in the market. Some of these are monthly, some of these are weekly. I update these every Friday and Saturday, spend quite a bit of time going through them for you. And what we're really looking for as we go through these is to see how the markets are reacting in different sectors, where we're seeing strength, where we're seeing weakness, what to expect going forward. And each of these are updated every Friday and Saturday, posted up on my website every Sunday. I also do the real estate updates every Thursday. They're coming tomorrow. This is a proprietary modeling system that I update, keeping you abreast of what's going on in real estate. And then we come down here into the weekly commodity to gold index. We come down into the custom volatility index, which I love this little thing. This is just wonderful for catching great trades. The market cap index, the global smart cap. This is the global index. This is the custom valuations index weekly. This is the US stock market index with all of my Fibonacci price amplitude arcs on it. This is the FANGs index. And then we go down to the custom metals index. Eventually, we're going to come down here to the TT scanners and all of the past TT scanner data that you can open and review. So remember, when we're in live trades, one of the things you want to do, first thing you want to do besides watching my video, is coming in here and taking a look at some of the data and reviewing some of this, and then going to my video. Now, my videos have broken out, let me go to the video page, into 3 separate videos now. We have the general market, rotational modeling system, and real estate data. Then we have the hot list, and then we have the custom indexes. I'm doing this to try to keep these shorter so you can get to what information you want instead of having a long 50, 60, 70-minute video. Each one of these are about 20, 30 minutes each, and I apologize for that, but I'm trying to keep you informed and deliver quite a bit of information. So as you can see, we now have, last week I had 2 videos, the week before I had 2 videos, and now we're going to have 3 videos this week and going forward. So real quickly, let's take a look at the hot list. So we're going to go to stocks, we're going to go to core ETF, and we're going to go to pure alpha. And pure alpha has been just really killing it over the last couple of months, where people have been struggling for short-term trades. I mean, it's been really knocking the ball out of the ballpark with these great little short-term trades. So we have a new trade just about 3 days old in DIA. It's up 3.25%. We have a new trade in OIH. It's about 5 days old. It's up 13.61%, and we've already taken half of profit off at 286.96, which is about 11% profit. What a great trade. I mean, this is just fantastic. And that's it for these. This is the core ETF, the core ETF right here, pure alpha list. The core inverse pure alpha list is CHAD minus 3.04, DOG plus 3.17, DXD up 6.28, SDOW up 8.90, getting close to probably taking our first target action. And that's it. So again, some really good trades. Now this one's just entered yesterday. So this is, it's under a little pressure today, but we'll see how it plays out. You can see we've got a protection level here of $22. So we entered at $23.39, currently at $22.68, and we have a protection level of $22 right here. This is basically a level before we get into a hard stop. This is a level where you'd want to try to protect the trade against any unknown or potential weakness going forward. Still is a pure alpha ranking system, meaning it's got a great opportunity going forward. Now, under value stocks, we go to pure alpha. CLX, new trigger as of this morning is up 0.5%. Cisco, trigger as of 3 or 4 days ago, is up 4.5%. already took a profit at 44.99 and took it yesterday. So there we go with, do a quick math here, 44. So this was about a 6% profit. CVX already up 4.36%, already taken a profit at 179. This was about a week or so old. GS up 3.61%, no profit target yet. We're still, or no target level hit yet. We're still waiting for it. IBM trade 3 days old is up 4.29%. J&J is up 0.75%. Trade was just 2 days ago. Man, trade was about a week ago, is up 3.37%. No target yet, just kind of moving, waiting to move forward. McDonald's, MCD, up 2.08%. Trade was only 4 days ago. SJM, trade was about a week ago, about 9 days ago, is up 3.47%. We've already taken a profit at 146.03. Beautiful little profit here. When you get right down to it, that's a nice solid 4.5% gain. UNH is up 2.3%. We've already taken a profit at 548. For where we got into it, that's about a 2.5%, 3.5% gain. Beautiful little gain right now. Walmart, a WMT, I believe that's Walmart, is up 3.43%. Already hit a profit target. We've got a stop already locked in, ready to go. Lovely. I mean, these are just great trades setting up. Let's come back up to the top and let's go to the Reddit list. Take a look at the pure alpha trades. We have Adobe is up 9.5 or 9.05%. Hard stop in place at our entry price. We've already taken a nice profit target, close to about 5.5, 6% higher. We have Netflix is up 13.404%. Already hit a profit target. Our stop is already above our entry price. Again, a beautiful trade. Absolutely beautiful. UNH is up 2.3%. We've already hit a profit target. Our stop is at our entry price. Looking very good so far. UP is up 3.14%. Was a trade that took place yesterday morning. So this is a new trade. We're already up 3%. And that's the end of that list. Let's come down and take a look at the hot list, the last one here. Apple is minus 0.53, took the trade yesterday morning. That was off the selling yesterday afternoon. This could recover very, very well. Cisco is up 4.50, already hit a profit target. We already have a stop in place. HBAN is up 0.77. Trade was just 2 days ago. No stop level yet, but we have our protection in place at 1322. MD was a trade just this morning, already up 2%. Beautiful little trade. Penn was a trade this morning, already up 2.63%. PGR is a trade this morning, minus 0.54. Party was a trade this morning, already up 2%. Snap was a trade 2 days ago. It's off 16%. This is obviously part of the rotation that's taking place in the market right now. We'll see how this plays out. This was a short at, so we're not above our protection level yet. We're short at 831, last price 971, protection level at 1135. We'll see how this plays out. This is still a good pure alpha system trade, but it's just, it looks kind of sucky right now. SYF 0.74% trade this morning. T-Mobile is up 5.9% as a trade was only 3 or 4 days old. And WLK is up 2.1%. And that was only a trade that's a day and a half old. WFC is a trade this morning, is up 0.43%. I mean, it's really hard to argue with these. Now, granted, this one trade right here is under some pressure right now. We'll see if it plays out and see if it continues to move downward. But generally, of all these trades, only about 20 trades, only about 2 or 3 of them are moderately dancing around the entry price with small negatives. And this one trade, Snap, is the one that's showing us the largest loser so far, but it's generally been very, very solid. You know, here's an Apple trade as of yesterday minus 0.53%. That's nothing at this point. So remember, when you're in here and you're taking a look at these trades, remember you have standard modeling, which is in and out of trades, and then you have rotational modeling, which is designed to catch bigger trends. And particularly what I love with the rotational modeling system, I'll show you, is these foreign ETFs. Now, these foreign ETFs with the rotational modeling system can be tremendous. Here's a trade in MEX. It's just 2 days old. It's already up 10%. BRZU, a trade that's a couple months old, is up 10.9%. CQQQ, a couple months old, is already up 26%. EDC is about 2 months old, 60 days old, it's up 32%. EDZ is already up 36%. EFA is up 4.05. That's a trade this morning. Here's a trade EFG from about 2 months ago, up 6.86%. EFV, trade from about 2 months ago, is up 3.05. EURL, trade from 2 months ago, is up 20%. FYLD, a trade from 2 months ago, is up 7%. IDEV is 2 months ago, up 2.47. IDV, 2 months ago, is up 10.4. I mean, take a look at some of these trades. Now, the more recent ones, like I said, will be more closely related to up and down trends like this. So when we get a new trade, we have a higher likelihood of seeing it get stopped out fairly quickly. But when we're in a trade for 2-3 months like this one, we're up 32%. This is a great trade for a small portion of your capital. Running these rotational modeling systems, you can catch some really great trades. So we'll come down here and look at yin and yang, which are just tremendous. So here we go. Yang trade is about 90 days old. It's 108%. What a great trade. And yin, we've got a trade that's about the same time. It's about 90 days old. It's up 67%. I mean, these are just incredible trade setups. The opportunities for you here are incredible. You come in here, you take a look at the 2X ETFs, you take a look at the rotational modeling system, and you start looking around for newer triggers. So here's one from last month. AGQ is down 11%. Here's one, BIB. Now, these 2X ETFs can be a little dangerous. You can catch some pretty big moves in 2X and 3X ETFs. So you got to be cautious and lower your allocation levels effectively. Okay, so Boyle caught a great move. This is only about a month and a half old, 49%. CHAU, about 3 months old, 33%. CWeb, about 3 months old, 56%. DGP is only about 2 months old, about 8.33%. DIG, which is a very ugly position right now, well below, let me check this, yeah, well below our protection level. So this would have gotten us out with a loss. EET, 26%, EFO, 7%, EZJ, 12%, FNGO, 25%, LTL, 12%, MVV, 3%. Again, these are here for you to pick and select. These rotational modeling systems can perform extremely well. They are running off of a daily chart. You just need to, just like we learned here with this trade back up here, we had an entry price of 27. We had a protection level of 37. So hypothetically right there is about 11% risk. Okay, we're well beyond that with 44. The system is still running the trade because it's running the trade. This protection level is not a hard stop level. We do not have a hard stop in this trade yet. What we're waiting for with this scenario here, and it's won 2 of the last 6 trades, so it hasn't been performing all that well. But what we would do here is if we're new to this type of scenario, we would follow the trade and we would use our protection level as kind of a soft stop. If we got above this 37.29 level, we would look to try to liquidate the position or scale back the position because we could see greater risk. So when we get into a newer trade here, like this one, 53.52 from a couple months back, we would want to watch this 55.89 level. That would be our area that we would want to try to protect our trade. So there you go. Again, the opportunities here are incredible in my opinion. You've got so much opportunity with these trades. This is the same one, C-Web again, but this is a big pop here. 20% to, yeah, it's going to be $4. It's not above our protection level. So this is our rotational modeling system, our algo doing what it's supposed to do. It's just we have a lot of volatility down here in these lower price stocks. So, but understand that the pure alpha trades are the ones that have the highest opportunity for success and will give you a great opportunity in the long run to stick with these trades. Moving then to the rotational modeling system or picking from some of the other types of stocks that are out here, for example, these newer triggers, these are great opportunities for you still. You've just got to be cautious of the volatility and learn how to execute them. I'll probably spend a little more time going over some execution rules and teach you how to use these more effectively. But for now, stick with the pure alpha trades and stick with the rotational modeling system. And remember that the protection level initially, when we get into a new trade like this one, MEX was just 2 days ago. We got into a new trade at 74.95 with our protection level at 65.84. That tells us that we have about a 14-15% protection level on this trade. It has not been performing very well. You can see here it's been extremely volatile. It is a valid new trade. We could take it, but because of the performance scenario and how well it's been or how poorly it's been performing over the last 6 trades, we would want to be cautious, and we'd probably want to pick a stop level that's at or near this protection level against risk. Whereas when you move down to something like this, BRZU has been performing 4 of the last 6 trades have been winners. It's got a great ranking system. This is also a scenario 73 and 57, tells you the kind of volatility that you could see in this market trend. We've got a trade here at 71.91 with a protection level of 61.21. Tells us we've got about a 14% rotation or risk on this trade, but it has been performing very well. So that gives us the opportunity to maybe allocate a little bit more to this trade. And of course, it's up quite a bit over the last 3 months. The idea behind learning to read these trades, and of course, when you come in and you take a look at them, it'll give you a list of the types of trades that's been taking place, the type of volatility that you're going to see, 20-30% type of moves. Then you can see here on the daily chart, you can see here the type of move that we're seeing. So understand, on a $60 stock, a $6 move is 10%. You're seeing essentially a $20, $30 move here. You're going to see 30 to 40% swings on something like this as a 2x foreign market ETF. So you need to be prepared for what type of trade you're looking at and how you want to allocate efficiently. Something that has broader volatility is going to be seen here typically, and that's going to give you an idea. You can see the volatilities numbers here, 2.35 and 20 versus here 1.46 and 15 versus, say, here under the NASDAQ. When you get into more non-volatile stocks, you're going to see the volatility numbers are a lot smaller, and that's going to tell you that essentially you're getting about 1.7 to maybe double that to 3.5 roughly typical price volatility. If you get into something that's bigger like this, Adobe, 1.5 to 48, this is telling you can get some very big price swings in Adobe. When you come down to AMAT, you can see potentially here, let's call it 11 to 20, 25% volatility. Come into Amazon, you can see here that you're getting roughly 11 to call it 20, 25% volatility. ASML has 0.81 and 73. This is telling you that you can get into essentially, I wouldn't say 73% volatility, but it's telling you that you can get into probably 15 to 20% volatility. AVGO has got some extended volatility as well. Baidu has got more contained volatility. BKNG has got incredible volatility, but look at the price of the stock, $1,900. Costco has got moderately contained volatility. I would say that this is around a 15 to 20% volatility. You can see here annually about what you'd likely see as far as volatility. All right, guys. Well, let's go ahead and make some money. Markets are rotating around. Fed is next week. We're looking for a wave 4 bottom to set up here and to hold up. If it doesn't, we could be looking at a really big extended downtrend. But my analysis says that we're looking for a bit of a bottom, and we'll see if it holds up. All right, guys. Talk to you later.